Okay, hello traders and welcome to our live trading workshop. So today what we got in store for you. I'm looking at Brent oil, which is big on the news, especially the US and Iran war happening at the moment. And then I'm also taking a look at gold on the lower time frames as well. And then finally, I'm actually seeing a trade actually on GBP/USD just coming up here on the 15 minutes. So all that is happening. And also today, those of you joining in new, we'll first cover the live trading potential trades. So we do some live trading and we'll look at some potential trades. And then we'll look at the topic for today. So topic for today is a very interesting one. It's based on Tom Williams, 3 VSA principles, okay? And then I'm also going to be revealing the missing link with those 3 VSA principles as well. For those of you who do not know Tom Williams, so he popularized the whole VSA methodology, which is volume spread analysis, started by Richard Wyckoff, and then popularized by Tom Williams, which was the founder of Trade Guider, which then got taken over by Gavin Holmes, which Gavin Holmes and I have done lots of live stream videos that you can find on our YouTube channel, which I'll give you the reference links very shortly. Now, what we're going to be covering in here, most people get inconsistent, right, traders? Most traders are inconsistent because first, they do not know what the 3 VSA principles are. So this is very, very important, which we also use over here at Master the Markets. Now, the next thing is, even if they do know the 3 VSA principles, they do not know how to apply it. And then finally, even if they do apply it, they feel that, there's something still missing. Why is it still I'm getting imprecise entries, still inconsistent performance? I don't know where to exit. All these things are still missing. So what is that missing link which gives that clarity and precision? We are going to be revealing that to you. And then the bonus section, I'm also going to be showing you how to integrate all of this, especially the missing link, into the VSA principles and then into your strategy construction. Okay, so this and more in this live trading workshop. Right, traders, so let's carry forward. As I said, I'm taking a look at something on GBP/USD. Those of you trading the futures, that will be 6A over here. I will just load this up very quickly as well in the time being on the SMI lead. Right, good. So let me get on to here. So first thing, as I was mentioning to one of our Aussie clients just now during my coaching session with them, is that the first thing we look at, right, traders, is a direction bias, okay? Okay, to get the direction bias, I look across the different time frames. I get my direction bias. Then the second thing I look at is timing. Now, all parameters that you do have or you've coded in as a programmer, you need to have both of this, okay? And that helps you towards entering the trade. I can already see some questions coming in, which is mainly, a couple of these things. I just want to understand your terminologies a bit better because I've been following you guys. I'll quickly give you a reference link as well, traders. Our masterclass webinar, okay? We've consolidated all of this 20 years, 25 years of our research all into this masterclass webinar over here. And what you can do is to register for that. We do once every month. You can click on the register button, and then after that, after you put in all your details and your number, you just choose what date and time you want to have it for. Okay, we have it run once every month, and this is in UK time, which would be about 2 p.m. kind of Eastern time. Just do the conversions and check it. Okay, with that said, so that you guys don't get lost with some of the terminologies that I use. Okay, later on I'll explain this much more further as well, how you can find out more about us and everything. Good. I think with that said, let me quickly do this because, as we all know, the market never waits for anyone, isn't it? So it's an uptrend phase one here on the daily time frame over here, and I'll quickly fill this up as also. It hasn't taken out its previous daily high as well, which is a good thing. In fact, I went through this. It's called the stretch opening range breakout strategy, okay, based on the stretch principle. In fact, my mentor tells me that his mentor, my mentor's mentor, is the one who taught Toby Crable, who then popularized opening range breakout. with this, we got a downtrend as well here, isn't it? On the, oh, sorry, this is on the 1 hour. So let me put it on the 4 hour here very quickly, as that one is populating up. That's an uptrend phase 1 here. We're down. Early on in the morning when I was looking at it, it was actually showing uptrend across most things, but right now it's changed a little bit. So on the 1 hour, let me quickly just keep an eye on that 4 hour there. Is it? Oh yeah, that's an insider bar, isn't it? Okay, so then on the 1 hour, what do we got here, traders? We got put the pro in here as well. Just get the volume up. Let me see. So this one here, let me just hide that for a minute. Okay, good. So I got the downtrend phase 1 here on the GPUSD as well. So I'll show you this table in a minute, what I am actually doing here. Those of you joining in new. In fact, those of you joining in new as well, I should introduce myself. It's Tune Up on here, founder of Master of the Markets, Illustrious Conference, and the Traders Open Day. So after this, 1 hour here, and a 15-minute rate, I've got a downtrend phase 1 as well, traders, okay? So this is what I've got here. And let me check on the stretch principles here. Stretch principle, yeah, bar mechanics wise is still showing on the downside. Okay, latest, this is low, isn't it? Let me see, on the 12 noon, 8 a.m. it's taken it out. I'll take a look at range lines. I'll give you some reference videos later. And then when we go through a topic as well, we can see in real time what's actually happening. 8 a.m. Right, when you look at the three VSA principles, I've seen something here. I'll just pinpoint it for those of you who've been following VSA for quite some time as well, following volume spread analysis for some time. I'll point that out. So 8 a.m. it's done, but not the 12 noon low, isn't it? Both, no. Lower stretch, 8 a.m. Let me just put it here, and I'll show you on the table what I'm doing, but not upper, but not 12 noon. Okay, so I've got that, but not 12 noon. Right, but not 12 noon. So what I should do here, okay, but not 12 noon, isn't it? Good, so I've got that one there. Range lines wise, has it taken out this one yet? Latest 8 a.m. No, this one is correct. So 8 a.m. So let me just do this one. Good. So this will make more sense once I show you this to you guys. 8 a.m. lower range, but not 12 noon. That makes more sense, yeah? Brew to ST. Let me take a look very quickly, traders. Brew to ST, that's NA. NA, let me see. Let's analyze this together. So this is the table that I've been filling up on. And if you can see over here, on the daily time frame, right, we are having an uptrend phase 1. On the 4 hour, also an uptrend. But then on the 1 hour and the 15-minute, we got to the downside. So we got conflicting information, isn't it? Right? Why we look at these 8 columns here, we take a look at that so that you can form your direction bias and then finally your timing as well. Okay, there's some videos on our YouTube channel that you can find this as well. that you can go through as well, okay, on the trend alignment. Now, so that's the ones over there. In terms of the bar mechanics, right? So trend-wise, 2 against 2, so neutral. And I can see that with the 1 hour stretch and the range lines. Now, those of you are asking the question about, but how do I get these trends and phases in a systematic way, okay? The key to that is market structure. We've done some videos as well before on the YouTube channel, which I point you to, but the best one would be the masterclass webinar, okay, where it's all in one place together. So definitely go and watch that one. And in terms of the bar mechanics from this column F over here, 1 hour stretch is on the lower side. Range lines, 8 a.m. lower range, it has taken out as well. So both pointing. So we've got about 4.5, and then Bro to ST is not giving me anything. Previous daily high and low is not giving me anything as well. So to be honest, I got about 4 out of 8, really, isn't it? But really, to be honest, it's 4 out of 6 because this 2 hasn't kicked in yet, right? So I would still form my bias to the short side. But I'll tell you how to play this, because from the higher time frame, it is showing to the upside. So I'll tell you how to play this, and we'll do this in real time. And if we don't get an opportunity, we don't get it, right? The main thing is that you guys learn how to fish, not that you just get the fish and the trade orders and everything. So what we would do is, if I want to do a short, so I've got my direction bias, which is a short at the moment, okay? Unless I get a surprise. Now, on the short basis, right, now the next thing is timing. Where am I going to come in into this trade, okay, is what I'll be looking at. So in terms of levels, we've seen all of this as well. And I'm also seeing a good volume spike over here. That means that's kind of a little bit of a stopping volume, where it's stopping over here, consolidating, and then taking out that high over there. But rather than jumping into the long straight away, that's why the timing is very important, traders, okay? So what I will do is, in terms of a bias perspective, if this does go further down with the bar mechanics, as well as the 2 time frames correlation, the lower time frames, then this is how we will play it. I don't think this is going to go that very far. I'll put an entry here, and that is also my, I'll put a pending order entry, right? So you see, it's your 12th node. That's also where my range line is. So this entry is quite strong if we do get it, okay? And I'll type this into the Zoom chat so that then you guys can get it on the Telegram channel, right? So if you guys are on the Telegram channel, you will get that as well. Remember, this is all so that you learn the principles and you can apply it in whichever way that you want in your own strategy, okay? So the low of this is 135.43, okay? And then, to be honest, I would prefer actually the long side because I can see the volume coming in quite strong to support this bottom here. But then you know what? I need a price action confirmation, which is what we are not getting to enter. But we'll wait and see. I'm just going to, after this, I'm just going to take a look at, I'll put my, I think this stop might be taken out. Maybe the first one we can take a look is probably this one here, or this one there, isn't it? It's okay, we'll readjust this. We'll see how this carries on to be. All right. A lot of patience is required in this game. 3561, 3563. Okay, you might take that out. You might need to modify that very shortly. And the 1 ATR level. Now, I'll take a look at the 1 ATR number here. Okay, so this one we can delete that. The 1 ATR number is about 7 pips, isn't it? At the moment. And this one here is about 10. So yeah, it's taken out that first level, which is showing more strength over here. So what I'll do is I'll put 2 orders. We'll see how that goes, right? So the entry and the stop, isn't it, traders? So we'll keep it there, and the low -8, 3530, 3535. That's right. Okay, 3535. In fact, it will go much more, but I will just give this one for now, and then we will track the price in long way as well. But you see, the thing what we got here, if I'm looking for structural breaks, if I go on the 5 minute, I'm just taking a look. That's a nice volume spike over there as well. But we just got to be careful before the opening bell. Maybe sometimes they just get people in, right? So another thing which we can play this move is through this, but my hesitation is because not all the other time frames are aligning, but the volume is good here on this consolidation here, okay? Ideally, we want this to drop a little bit and onto the 15-minute structure as well. So this is what I'm not getting. Sometimes, sometimes your direction bias might be right, but your timing might be off, and that's where you might be caught out. So what I'm going to do to get in at a stronger level, there's 2 parts we can look at from a long perspective. So we'll track the price. We can either, the only thing is, with that, we might need to wait on a bit of a retracement. In fact, you know what? If I didn't play this on the 5, yeah, we could have taken that. Okay, never mind. Okay, I think we can't. We just have to sit on our hands now. Don't think I will be. I'll play this on the 15-minute time frame, traders, and then I'll show it to you as well. I'm not sure if we get a fast breakout or not. Okay, the entry is what I'm not getting a good hit on this. I think, you know what, we will wait. So I tell you what I'm looking for. You see, this is a next level what I'll be looking at for you to take out, to enter. Okay, but then yet again, if I were to do a stop on here, I can only place it for the long position. Yeah, if I do want to take a look at it, is towards here. Okay, and then the target can be for taking out the range high and towards going the upper stretch, which is not really our kind of best setup. So I'm going to sit tight on my short over here, which is what I sent to you guys. And if we don't get it, it's fine. You know what? We'll just leave it as it is. And as I'm telling you that, because I'm not getting the good right setup, I tell you what I'm really looking for. And then when we go through the VSA principles for the topic today, that will make a bit more sense, If I'm looking for a long, right, I'm really looking for this. This is good for long because the volume is matching up with the price as well, right? We're getting strength. We usually buy on strength on weakness, okay? Just as everyone thinking is going to go short, you get the volume, professional buying coming in, and then it starts to turn. So in that way, but in terms of price, you need a price confirmation, okay? So I'll look for a little bit of test in that area, which you can argue you had it here, but I need it more stronger. I'll show you in a minute what I'm talking about when I go through the topic. And then we can take that more strongly. Another thing that's going against me also is the bar mechanics, which is what I was showing you in this table here, right? Because from this column onwards, this last 4 columns, at least 2 of them are pointing towards the downside on GBP USD, okay? So that's where I'm at. So I will keep to my short, or if it shows me another price pattern towards the long, then I will ideally take it. Sometimes it's like that. If you do get 1 or 2 factors, but it's not according to all your checklists being ticked off, Don't take it, because consistency is very important in this game, okay? I will tell you this as well. I mean, on Brent, are we getting a better correlation here? Yeah, I think that would be a bit better. I can quickly do this, and I think the time being, right? So we got uptrend. I'll do Brent and then we'll stop here. And I'll give you all gold. What is gold doing? Gold is towards the downside, but it's also a bit here and there. So let me just take a look at Brent. Just looking at correlations between the time frames. And then I'm getting the 4 hour as a downtrend. And then I'll take a look at the 1 hour today. And is that towards the downtrend? You see, what we got here as it's loading up, we got market structure here, right? We got the tops and bottoms quantified. I'm going to give you some reference links. You see this orange arrow and blue arrow here, and then the trend box at the top. That's what this thing is doing, okay? So here, I still got an uptrend phase 1 as well on the, oops, sorry, that one is not the one. So uptrend phase 1 on here on the 1 hour. Okay, on the 4 hour, right, I'm getting a downtrend phase 1. Okay, so that's fine. 1 hour is uptrend phase 1, and then 15 minute. Wonder why they're not really correlating to the best today. Uptrend phase 2, and then there's upper stretch as well. No, we are not. It's quite messy today. You'll see when this happens, it will start to chop. That's why we do know to just sit on our hands sometimes on days like this. This is the upper stretch as well. And range lines wise, it's not taken out the 12 o'clock, isn't it? Latest is 8 a.m. Right, taken out 8 a.m. but not 12 noon, okay? Correct. Bro to ST, I'll tell you as well. That's also to the upside more or less. And the previous daily high and low is taken out the previous daily low. Not the best trader. So if I take a look at this table again on Brent, I still couldn't get it to align. So 2 time frames are up, 2 time frames are to the downside, at least still to the upside. You can see, right, even 15-minute, but the direction phase 2 counter trend is towards the downside, isn't it? So even if I did give 1.5 points for time frame correlation, but then over here, you see this one, these 3 things are pointing to the upside. So 4.5 out of 8. Still not the best, is it? I mean, if I were to do anything out of this, I'll still take it to the long, but price action wise, I'm just not getting the confirmation to enter here. So I got to wait and see. Is it following into the retracement? Is it going to level off towards the upside? We'll wait and see. This is the same thing what we're doing here on the GBP USD as well. So what I will do for now, I will wait and see on how this performs if I do get a setup towards the downside, okay, or towards the upside. The first level, if it does take it out, would be 3570, okay. After that, if it does go on an up bull straight line, then you can take out this level here. But I need to have my price action pattern set up. This will make more sense when I go through the topic for today, okay. But for now, I'll keep the short order and we'll see how that plays along. Okay, 1 more minute to the start of the bell. Right, I think those of you guys have been asking me and pressing me about where do I start. Some of these terminologies like stretch, like market structure, trends, and how do you get your trend in a systematic way, the range lines, where do I get all that from, right? How do I find out how much move is left for the exit? All of this, I would say the best place is the masterclass webinar, okay? So what you should do is When you go onto this page, you can have a quick read through, and it's only like under an hour, like 50 minutes or something, really packed in with our 25 years and our 50 years of cumulative team experience over here, 25 years of research and 50 years of cumulative team experience. When you click over here, put in all your details, your email address and number and everything, and then after that, select the date, right? When you can make it. And I would always say choose the earlier one because time is the most important commodity, isn't it? Once it goes, it never comes back. These are all in UK time, so do the conversions according to where you are, and then you can then come in and listen in a highly invaluable where we go through the market structure, the open equity. It tells you all here. Are you unsure where to enter? This will nail it. Do you know where your optimal stop to put is? Because a lot of traders come to us and say, you know what, I'm getting stopped out. Where do I place my stop? So that most of the time I do not get stopped out, which is a title. How intermediate traders can avoid getting stopped out 98% of the time based on probabilities, right? And achieve consistent performance, even if you've been trading for over 5 years. So all this you'll be learning. Are you dreading another year of inconsistent performance as well? So all this we will cover in the webinar, traders, okay? And also, you will hear some client stories which have been incredibly transformational, who started like you, watched on a YouTube video, followed us on a live stream, and then came on to our programs and learning our methodology along with the VSA principles. That's when it becomes really powerful, which I'll show you in the topic today. Right. Now, with that said, those of you who've been following us for quite some time and all of that, you know our material and everything, and you've been sitting on the fence or life got in the way, this happens. And I would say if you want to get the smart money indicator OE onto your chart so that you can get it all on a systematic basis over here in a structured way, right? All showing it to you. Then I would say go onto this page, the SMI OE page. The link will be there for you on the YouTube chat. And then you can go there and then you can have a read through and then look at the price options, what you want. And also, I just want to mention that you just don't get the indicator alone. I think that's the misconception people think about. And it's not even an indicator. It's not even a buy and sell indicator. It's a framework, okay? And with that framework, you get all the data points. You know your trend and phase across all different time frames, which I looked at. You know all your data points as well, all your tree stats, okay? Your how much move is left, where to place your stops, how much time it will take to your target, everything, okay? All that, right? Which is all included over here as well, okay? The SMI stats, you see, for unlimited instruments. You can do that anything, ETFs, bonds, name it. So that is all included in the indicator. Not only that, you also get 3 pre-made strategy rules. That's all in our members portal, right? That will tell you how to use the SMI very efficiently. And from that 3 strategy rules, you can extract some principles and you can integrate it into your own strategy as well. So you can do that too. And along with that, we also give you monthly momentum sessions too. Every month, you get a group session where you can come in and join, like on a Zoom. And any questions you got, we will answer it. And also we'll go through our performance, market analysis, all of those things. And also a psychology video to keep you in momentum, to keep up the consistency, okay? So we will do all of that, right? And it's going to be not available just on TradingView. We can do it also on MT4 and NinjaTrader platform as well. Very soon we'll be releasing it on MT5 too, okay? So I think with that said, another reference link I'll give you is also our YouTube channel, right? On our YouTube channel over here, youtube.com / master the markets here, right? So over here, what you can do is, once you come onto this channel, some of you say that, I've subscribed to the channel, but I don't get notifications when you go live, right? So what you do is, you click on this drop down arrow here, right? After you click on this drop down arrow here, you click on the all bell icon, okay? That will give you notifications straight to your phone, all right? So that's what it would do. Now, once you got all of that, so anytime we go live, then you will see it pop up. You can follow us, or you can also click on the watch later button. Then you can watch it at your own free time as well. So a lot of clients do that as well. So you can see on our channel, we got really lots of good content over here. We're rearranging the content, but more or less in the thumbnails as well. You can see our full trading results of 2025, our Q1 results as well. just a little bit under, just a little bit for 20%. Got over 20%, a little bit. And then also in April, I think a little bit down, but still overall up. But we will show that at the end of the month as well. We did an AI trading heat map as well. So every single one, there's a lot of content here. This is a really good one to watch as well. Must watch. Why market structure is important. Okay, and the swing trading edge. So this is really good. It will take you step by step. But I would say the one that will put all of this together that you're learning systematically would be the masterclass webinar. So definitely do check that out. A quick shout out to Trade Nation as well, who's sponsoring us for all our live streams as well as our annual summit as well, Trade Nation. And that's the quick shout out that we also want to make out to them. The other things that are coming up on our site, upcoming events, is the next Traders Basecamp live webinar as well. Okay, Traders Basecamp package. You can get that with the Traders Basecamp live webinar. That's happening in May, on the last week of May as well. So you can take a look at that. I think with all of that said, traders, I'll take a look at GPUSD very quickly. And then I'm going to also take a look at our presentation for today. So this is why I can tell you in real time why, right? We just don't jump into the move. Timing is important. Now, if you got into that move, listen, there's nothing wrong getting into the move as long as you know where your exit should be. But the worst thing is you got into that move and now it's doing that and you're panicking, okay? This might still well turn around, we don't know, but that's why follow your rules. We got clear rules. It doesn't matter even if it goes up, you know, it goes up more further up and everything and I missed the trade, it's okay. As long as it's not my strategy rules, I don't take it, right? I'm looking for a particular price action pattern set up before I take it with more conviction, all right? So on the long side, I'm still not taking it. On the short side, we got our orders. I will reevaluate this. I'll keep an eye on this as well on the other screen. Okay, so I'll move that to the other screen. And as I'm going through the topic with you, I'll keep an eye. And if anything changes, we will update you guys. Okay, so good. So we got that one there. Now, let's move on to the topic for today. The three VSA principles, right? And the missing link. For those of you who do not know Tom Williams, right? So Tom Williams is the one who popularized the entire Richard Wyckoff method. Okay, the Richard Wyckoff method is the volume spread analysis. Okay, I'll be going through this in a minute, at a moment. For those of you who do not know about it, for most of you aware of it, you will know Richard Wyckoff and Tom Williams as well. Tom Williams then founded Trade Guider, which we have worked with quite a lot. So over here, if you take a look at our YouTube channel as well, you can see the team has collated the playlist that we have done along with them, all our live trading sessions over here. See if I can, then this one here, if you go scroll down on the multiple playlists, you can see, right? Live trading with Gavin Holmes, Trade Guider. So Gavin Holmes took over Trade Guider, which was Trade Guider company, which was founded by Tom Williams, okay? And Gavin got personally mentored by Tom Williams as well, which most of you will know. I've been following VSA for quite some time, and I've read the book Trading in the Shadow of the Smart Money as well, okay? So all that is there. We've done so many live streams together with Gavin, 46 videos there. You can watch that at your own free time, okay? So we've done a lot with them. And a lot of the VSA clients have found that when they put this missing link together, that's when it makes so much sense, okay? Which we'll be going through today. So to go through why you're still getting, why VSA traders are still inconsistent, okay? The reason is for that, which is the title for today, is because of this, they don't know the three VSA principles, all right? They also don't know how to apply it as well, right? And then after they know, let's say if they do not apply it, but they still feel there's some missing link, which is not giving them like precise entries, like it's imprecise, subjective, and they don't know where to exit and all of this, which we'll go through in real time now. So with some examples. And then finally, I'll show you how to integrate all of that into your strategy, okay? How to construct that. Strategy construction is a very big topic, traders. This is what we go through very intensively over 2 full days in our Traders Basecamp live webinar, okay? Which also includes, as a package, all the content for strategy construction as well, okay? Along with very important concepts that many people been trading for 15 years do not know. Right, so now with all of this, let's go through one by one. What are the three VSA principles, right? That's Tom Williams over there as well. That's the book that he also released as similar to our company name as well, Master the Markets. In fact, this reminds me of one story, which is Gavin, when he first saw us at an exhibition. This was about 9, 10 years ago, and he said, oh, yeah, the name of your company is the same as Tom Williams' book. Did you just steal it like that? And you know, I looked at him blankly and I said, actually, to be honest, you know, I don't even know who Tom Williams is, right? Because I was doing a different methodology at that time. And he said, "Oh, is that right? Oh, okay." And then that's how we all started talking and then being friends. In fact, interesting, isn't it? How the dots joined together. We actually called our company Master the Markets without even knowing there's a book called Master the Markets that was written by Tom Williams and the VSA principle that we will then later come to work with so closely, right? Who would have known all of this? There's always a higher orchestration that's always happening, isn't it? A divine orchestration that knows everything, how it all comes together. Good. Now, so what are the three VSA principles? Now let's go through that. The first thing what we say is that's the VSC. Okay, for those of you who do not know VSA, right? Let me just go through it very quickly, and then I'll go through the three principles. In VSA, what they do is they first look at the volume. Okay, just by volume you cannot get the direction bias. All right, so then what they do, they layer the second part, which is called the spread. Now, those of you who are not familiar with the spread, in the US they call it the spread. Over here what we call it is the range. Okay, when I first heard this I was like, what do you mean spread? You mean the bid and the offer price, the difference? No. So what they call in America, the spread is the range of the bar. Okay. So how big is the range of the bar? So spread or range. Okay. So you look at volume, you look at the range of the bar, and then finally you look at the close, where the bar closes. So in fact, before we came across Tom Williams and the whole volume spread analysis methodology, when we were going through our mentor's mentor material and everything, my mentor was coaching us, is that what we found out is that a lot of these principles, and my mentor's mentor actually references Richard Wyckoff a lot, okay? And what the difference that we have here in Master the Markets, that's why we teamed up Trade Guider and Master the Markets, is that we have quantified everything. So you know all this close, wherever it closes and everything, we got probability studies on that. So we want to dissect each strategy, okay, and each bar and know the probabilities for that as well. So that's what I was going through with one of our Aussie clients today morning as well. And then when you combine the volume on it, it becomes very, very powerful, traders. Okay. Okay, good. I think that's on the VSA side. So I gave you a snapshot. You can always go and delve deeper. You can look at all our materials and everything. Now, the next one, I will give you a buy example if you want to go long. Okay. The SOS over here, what it means is strength, signs of strength. Okay. Signs of strength. All right. So how do we look for signs of strength? We look for a volume bias. Okay, so volume. So we look for some kind of volume signs to give me the signs of the strength. But just because on that, I don't enter the trade. And that is where the second principle comes in. Okay, just like what we did with the GPUSD, right? We didn't go and blindly just go and enter. Just because I saw the volume strength coming in. The next thing what I look at is the price action. Now, very deeply, the second principle we're looking for is the EF principle, which is on the price action, I'm looking for, in that range of the bar, I'm looking for effort versus result. Okay? So what I'm saying is the effort applies to the range of the bar, but finally, where did it close? The result. So yes, it's put a lot of effort, right? But finally, where is it closed? So if the open was here, but finally it did all that effort, but finally the result was it dumped down further down, okay? And therefore this thing will then now become a red bar. So you see, this is what popularized as the uptrust bar, isn't it? Took out all the shorts in the market to come back further the down, okay? All the buy stops in the market if you're going short, okay? Good. So that is the price principle, right? The effort versus result. So it's very important. Then the third thing is the EF versus R. Yeah, that's what I put here. The third thing, this is very powerful, which is what I was touching on just now, right? I need a test, okay? Test in a rising market. That is a popular principle as well, okay? Test in a rising market. Now, the test in a rising market is like this. So if something is going in the downward side first, and then it forms some leverage on the bottom, now it's rising, isn't it, right? I don't jump into that rising. I wait for the comeback and the pullback and then to test. It's very important. It's very powerful. If you actually formulate, in fact, we are in the stage of actually formulating some research studies over this, and this is going to be very powerful with our programming team, which are actually clients like yourself who will watch this, are fascinated, and then they come and join us, and which I showed it on the AI on the heat map as well by Antoine as well, and we're working on more other stuff for more higher institutional cash as well to trade on, which is what we look at, and we will quantify this, okay? Because what you don't have at the moment on this test and everything is that you don't have any probability study. How many of those tests, when combined with all these two other principles, how many of the times does it succeed, right? Which will give you more conviction, isn't it? So all that stat study is not available anywhere. We are the only guys publishing it, right? So I will show you all of that once we have constructed that. So that's the final principle, the test in a rising market. Okay, right. So now, how do you apply all of this? Okay, and how do you apply all of this? Right. Let's say in a long, I do look at downtrend changing into what we say a change in market behavior. So the test. All right. So here on GBP USD, now let me apply all of this on GBP USD at the moment. Okay. Right. So the first principle is what? So if let's say, if I just took a look on this just one time frame only, I'm not going to correlate anything else. I'm not going to look at bar mechanics. I've got a different strategy now, right? Now over here, I saw volume first, okay? Sign of strength. This is a downside market, isn't it? So if I were to shrink that, right? And let me actually hide this. Yeah, let me hide our indicator first. Then this will make sense when you look at the next one, right? Yes. So if you look at here, so it looks like, okay, yeah, naturally it's going down. But some of you in the room, you can type that into the YouTube chat box as well. If what trend do you guys think? Some of you may argue that this is a consolidation, isn't it, at the moment, right? So you're not sure what trend that is in. Or some of you might argue and saying that's downtrend. So type into the chat box. I'd be good to know what you all think, what the trend is, right? As always, I can see that we're getting a mixed response. Not everybody is saying the same answer. So let's just assume this was in a downtrend, okay? Now, when you get the downtrend, and I'm seeing some rising volume, so that's my first sign of strength. You see the first principle. First principle, sign of strength, right? Which, like in classic VSA principle, just because this is volume is shooting up, I'm not going to sell into this, right? This could be a sign of strength in a falling market, okay? The professionals are buying into this seller bar. So after that, then I look for some more signs. I can see that after that it's stopping a little bit, it's consolidating a little bit of the price action, and then finding some ground over here, okay? That's what it's doing over here, right? So I'm getting my first principle ticked, okay? Sign of strength. Then the second principle, which then what we look at is effort versus result, okay? Now over here you can see that's a very big seller bar over here that, you know, some of you have not got into the long, right? Rushing and impatient. This would have caught you out, isn't it? This big seller bar over here, and then you will be thinking, you know what, is it going to carry on? Is it going to come down? All these questions will ring in your head, right? So the second thing is effort versus result, okay? Now, in terms of the effort versus result, if I want to take a long position on this, I needed to close more higher to the upside, isn't it? And ideally also take out the high of this seller bar to show that this is not really good selling, right? To give more confirmation. So that's the effort versus result part. Now, the final one, and the effort versus result makes even more sense when you're taking a look at a spring bar. So this is what they call the spring in VSA, right? So if you take a look over here, the effort versus result, those of you who are more aggressive, wanted to enter even more earlier, this is what we call the spring bar. And the effort versus result is quite strong here. So you got a sign of strength, that's tick, number one, principle number one, tick. Then the second one that we got is a spring bar, effort versus result, where it stops the leveling of the bottom, and then it also closes towards the high as well. Okay, so that's what we got here, right? So that's that one there. So the second is a tick as well, if you did want to buy this on the sign of strength. Then the third thing is the test. Now, if you want to wait for a test, okay, then what you do, depending on whatever time frame that you're looking at, right? So let me just go through one by one. So the first principle we got, which is a sign of strength. Second principle here, which is the effort versus result on the spring. And then the final thing is the test. Now, some of you may argue that if I were to zoom in to take that trade, if you want to take it to the upside, the test actually came here, right? When it came back down, tested that low, but didn't take out that low here. And then it bounced back higher up, okay? So if I were to take a look at that in the lower time frame, okay, that would make a bit more sense, all right? So here, where I had the spring coming in on the 15-minute time frame, and then am I getting a test here? Now, the third thing is it's more easier to see when you look back, isn't it? Right? Oh yeah, I've got a test here. You know, I did get a test. That's the third principle, test. So we did get a test. Now, some of you are already jumping the gun a little bit here, right? So you might say, but Till, you know, that's where I get really confused. Yes, it looks like a test in hindsight, but is that really a test? Because right now it's coming back further down. Okay, so let me just put this together, then I will hone in the points. Right. So we've got number one, we've got number two, right? Effort versus result on the spring, right? And the stopping volume. The third thing is what I'm saying here is the test, isn't it? And then it springs up after that as well. Didn't take out the low after that, right? So this is where people can come in as well. But then in real time, if I were to do a replay on this, it you're not very confident when that happens, isn't it? Right? Maybe you can say even when that happens over here on the next bar, you're still not very confident, right? Because even after that test, it then came back further down over here. Then it came back, sprung up again. So maybe at this point, you might be thinking, you know what? Yeah, maybe it's time to enter that. That's the test that has happened already. That's your third confirmation on the principle. But there's something still missing, isn't it? But this is how you apply it, right? That's what a lot of VSA traders come and tell us, which is what we come to the next part. But even after I apply these three principles, right, which is the sign of strength, then I look for the volume, right, sign of strength, and then I look for the effort versus result, the spring bar, and then the test. But even then, there is something that's missing because I'm still not confident to where to really exactly enter, right? And if I do that as well, then it's just not all correlating as well. You know, I'm not getting consistent performance, is what a lot of VSA traders tell us. And I give you the missing link, and that's why Trade Guider and Master the Markets we actually teamed up quite a lot, and we did so many videos together, and we caught all of these trades in real time. And the missing link really is, okay, you're getting not confident about your entries, then also you're not sure about your exits as well, then you also get this fear of missing out as well, all these things, isn't it, traders, right? So all that thing starts to kick in. Okay, then finally, what is the missing link then? What is the things that you need? You see, what you really need is what we covered in our previous session as well, which is covered in the masterclass webinar. You need to always know how much move is left because the exit is very important. Because if you take a look at in real time here, right? Let me come out of the replay mode here. Just leave. You see, if I come out of the replay mode, this is where we are in real time. And let's say you entered this around here, okay? And you held on to this trade. Now, when this is happening, you're almost break even now, isn't it? Right? And you're panicking maybe if you're not exited. So you see, traders, it's very, very critical that you must know where to exit as well. Yes, you can apply the opposite VSA principles for that as well, and there's many more on that. But you need some kind of a framework, which is where you all will get to. I need a framework where it would tell me what we call this the market structure, right? That's the video on the swing trading edge on the YouTube channel. And in the masterclass webinar, I'll go through this in more detail. So here in the framework, once you got your tops and bottoms quantified, you can also get your probabilities as well. So let me show you now the missing link, right? And then this will all make sense together, okay, on how we can actually play this, right? You see this one is coming back further on the downside. But let's see if it tested or not on the 15-minute. That's why we don't want to jump into the entry. You see now why? On the long, and we were looking at the short side. Now you see, and we're still keeping that short. Now what I'll do is, to make it all clear now, you see, now once I show this, the market structure, it will get a bit more clearer, okay? And you apply these two things to the VSA principle, everything makes absolute sense. You see, this is what we mean, right? You see, where the volume kicks in, right? So if you start from the 15-minute, then I drop it down to the 5-minute. Right? As I said, over here, let me do this one here, which will hone in the principles. Let me do the replay. Right, over here. Right. Now, here, as I said, we got a volume surge, right? Strength on weakness, right? Signs of strength, okay? Signs of strength. High volume bar, and using the trade guider volume indicator, you can see is above the third relative moving average as well. So sign of strength over there. So I'm waiting for a price action. Okay, so that's the first principle. Second principle, I'm getting a spring as well on the 15-minute as well, right? Which is to closing to the high as well. Okay, that's my second principle there as well. Okay, then my third principle now, is waiting for the test, right? Which I said. Now, then if I were to forward this now you'll see the test will become a bit more obvious now once I apply this market structure over here. Okay, so that's what we are looking for. So we got that spring bar, whatever you say, right? Effort versus result, and matching up with the 15-minute. Now I'm going on to the 5-minute to time myself where I exactly want to enter. Okay, then you can see that, you see that's confirmed that high over there, but we need a test now, right? Main critical thing is doesn't take out this low at 35.42. Okay, if you're looking to go long much earlier on, right? This was at about 11:25 our time. And then there we go. You see, we got the test at this bar here, and that is also matching up with effort versus result. Now, once you got that one there, there's two ways to enter. Either you can enter aggressively on the close of that bar, because that's when the blue arrow would have popped up. You see, if I do it slowly, you guys can see that as well. This is how applying market structure will help you, traders. Yeah, I saw a good volume surge over here, but then the effort versus result is not good, and then it came back to its close, and there we go, bingo, right? So that's where I get it, and my blue arrow comes up as well. That's when I know that my bottom is confirmed according to this market structure. So at this point, if I want to take a long earlier, I would enter on the close of this bar. Okay, right? Or another way to enter on a test. So this is what we got. So let me draw it out for you. So I can now, you see, using this also, I can put it into a line diagram. Easy, isn't it? So here, you see, then I got this. The most important thing is it didn't take out that low. See, it didn't take out that low. See, it came back very near. Again, nice volume surge, right? Professional buying coming in on that narrow spread bar as well, right? Another VSA, solid VSA principle there. Narrow spread bar, big volume, and then the next one shoots up, but the effort versus result is not good. Then after that, I got a big confirmation there, with the close being to the high point, and then I also get my SMI confirmation as well. So that's the point, traders. You see, now I got my test. That's the third principle, ticked off. And at that point, where do I exactly enter? Now you see we're talking about precise entries. So we can enter here on the close of the bar when the test comes. If you want a little bit more confirmation, I would get in at the break of this neckline, okay, of the test. So either two entries. Nothing is good or bad. You got to run them consistently and see how they perform, okay. Now after that, that's not the end of the trade, is it? Then you need to know where to exit, right? Okay, so, and how do we get that exit? So let's see now, how do I get that exit? Now, I'll show you this stats over here, and that's what this market structure does. And this is why a lot of VSA clients like to apply this smart money framework onto what they're doing, right? So here, I'll just take a look at pips or ATR, whatever you guys are familiar with. I'll take a look at OE. In fact, I'll take a look at pips. Yeah, you can tell you pips as well. We do both. So you see over here, it tells me that on the 5 minute, right, it will get there about 60% of the time, 5 pips, okay? 60% of the time it will get there, all right? I'll just take a look. Also, I'll show you this as well. Why? So we can take it either as raw number, or we can take a look at ATR number as well. I'm just realizing I'm running out of time a little bit, but hopefully you guys are finding good value out of this, because I'm showing you how to apply all of this in real time, right? That's the best way to learn. And I'm going to real time because I know 3 o'clock. It'd be good to see how that trade has worked out as well. So this will populate now. You will start to see an ATR format as well. As it's doing that, I will take a look at ATR number as well. That's about 5 pips at the moment, isn't it? So there you go, bingo. So I've got about 1 ATR, you see? 62% of the time, probability you'll get there. So now that I know, if I want to trade it on the 5 minute, if I want to get more longer distance, I can use a higher time frame. So by doing all of that, then I can see that one of the targets I can do, right? So this way we put multiple targets in, or no target as well. So you can do 3 things over here, right? Understanding this. So what you can do is that you can put a target for after you enter on this close of this bar, right? For 5 pips from there. So 355 close is 555. So I'll do 355, 3560. Okay, 3560. That is, now you see, you'll start to see very soon that now I'm trading based on probabilities. That's how trading should always be. That's what I keep telling all our clients as well, right? I tell all our VSA clients that too as well. So that's 35660. That's my first one on the 5 minute time frame. Okay, 62% chance of getting there. But that's without applying any filters. But after you apply this 3 VSA principle, this will definitely shoot up when you look at your strategy results. This will go up to 70, 80%. It would be crazy, be mind-blowing. And we have proven all this in real time, right? If you look at all the videos that we have done with Gavin Holmes and all that, on the Trade Guider team on the YouTube channel, which I just showed you. So that is the first one over there, okay? That's the first target. Now, the second target that I can take a look at, because I correlated the 15 time frame also, I can get a 15-minute time frame correlation too, okay? So I can use the 1 ATR from here as well. So that's about 10 pips from here. From the high of this bar here, that's about 3567, okay? So I can do that too as well. So 3567, okay? There we go, okay? So I can first run these 2 targets to begin with. And if you want a bigger target, you can capture the range of the bar too as well, or go for the high of this bar today. So if I want to play this then forward, and I'll do it much more faster now. So I got two targets now, if you're following me, right? So now here's the part, the exit, isn't it? This is I'm talking to you about the missing link. Once I got the framework, once I got my probabilities next to me, and I know how much move is left on a probability basis, then what I'm doing is I'm getting precise entry and I'm getting a probability based exit. Okay, that is the whole trick of all of this. All right, then you can trade a conviction. So now let me play this forward, and then it wriggles around. Then you see you stick with it because now you're trading a conviction, and then it hits the first target, right, which is your 5-minute target, which is 3,516. Okay, right? And then the next one, 3,567, where did it actually confirm? So if I want to be absolutely bang on, it's on this bar, 3,558. So 3,558, let me see, plus 8, isn't it? 3,558, 3,596. Okay, so as it's always from the close of the bar. Yes, 3,566. Right, just here. Yeah, correct. It just touched it and came back further down. Okay, traders, on this bar here. Okay, that is if you took on that long position based on the VSA principles and what we've talked about so far. And in real time, I've just shown you this as well, right, on example. But when we came into the market, right, we saw all of this. We didn't take that trade on the long side, but we were looking at more confluence of factors, wasn't it? Remember? And then we were saying, but that's pointing more to the short side, and therefore I will keep my short order and not going long yet, because ideally I would like to have a test, isn't it? All right, so that's what we were looking for. And right now, I am still not getting the test as in with this smart money market structure. Okay, if I do get that, maybe today you won't get it. It'll be just trapped within this. I've seen that. And I don't get that top confirmation at the bottom, a higher low, I'll not be taking this on the 15-minute. Okay, so that's the idea. But I've kept this also. You see on the short side, we've still not entered it because I've placed it in a strategic way where it still hasn't triggered me. So this is the way that you can get the absolute clarity with the missing link when you put the smart money market structure on there. That's what we got, the framework. And why this all gels in very well is because my mentor's mentor actually based all of this on Richard Wyckoff's principles of VSA. But the difference is we quantified it, right? Because where have you seen, and that's what blows everybody's mind, is that where have you seen probability stats study like this? You will not see it anywhere online. That's what all our clients who have stuck with us over 10, 15 years all say. We cannot find anywhere. Everybody says trading is based on probabilities, but nobody tells you what those probabilities are. And I've shown you in real time and how we get those probabilities and how we can play it. Okay? Okay, good. And that's what I'm saying over here. I'm just showing that in more diagrammatic format here. How much move left? You must always know. If there's anything is key for exit, how much move is left. And then those of you who don't want to put a target, that's fine, but at least you know as a guideline what the probability targets are, and you can keep trailing it as well. Okay? So good. So that's that one there on the 3 VSA principles. And the last thing, right, and the probability stats have shown you that as well. So these are the two missing links. You don't know how much move is left, and you don't have any probability stats for exit or entry, stop loss, nothing. Okay, that's what the masterclass webinar will help you as well. And the final thing is, how do you integrate all of this into the strategy construction? You can either do it as a single time frame. I don't have much time to go through this. You can either do it on a single time frame, which I did by looking at different time frames, but then I just traded. I can do a target just on 5-minute, which we got here, 3,560, which I showed you on the buying side of things if you want to take on a buy. Or the other thing is, I can take a look also as a RWS strategy, Ripple Wave Swell. So another way, powerful way to combine the VSA analysis onto here with quantified market structure is which of those 5-minute bottoms is also going to become a 15-minute bottom and then going to create the market structure, change in market behavior to turn this entire downtrend into an uptrend. And that's how you can combine all that 3 VSA principles with our smart money structure, smart money framework structure, but in a very systematic way where we are taking the trade, okay? That yes, okay, I'm taking it on a 5 minute. Let's see, on a 15 minute, it's confirming, yes, I've got the 5 minute, 15 minute bottom. And then finally, then I take a look at the 1 hour bottom. Is the 1 hour bottom going to confirm as well? Am I going to get the blue arrow and the blue dot? And then finally, is that enough to take out that high over here to change this downtrend to the upside? So based on that, you got so much clarity and you are trade managing a trade, or you have your different targets to take out along the way too as well, okay? So that's how we would do it, by looking at the 3 VSA principles and putting that missing link, which is the smart money framework structure with the probability stats. And all of that smart money framework and probabilities is what we programmed into the smart money indicator. So by now you would have understood that the smart money indicator is just not a buy and sell indicator. It's a framework with probabilities to help you construct any kind of strategy. It's not very rigid. It's very flexible as well. Okay. So just as a recap, now that I finish all of this, is that what is the main points that I covered today? So I took a look at this, right? And it'd be good, right? So actually, before I even say that, this is how, I just want to mention that this is how we've been getting all the results over here. We're up about just under 20% now, 17.18% on these three strategies here, right? For the year, end of day strategies, all logged in into each trade over here on the journal, right? And then given to all our paid members on our live trading room. Okay, every evening, all in real time. That's how we're doing it. We don't shy away from wins or losses. February was a losing month, but January was a very strong month. March was strong, and then April is a bit slow as well because of the uncertainty in the markets at the moment. Okay, so that's how we've been able to do all that with the strategy construction over here. So as a recap, what have we done so far, traders? Number one, we took a look at the 3 VSA principles, right? And what are the 3 VSA principles? One is that we took a look at the sign of strength, okay, on a buying side. That's the first principle, or sign of weakness on the opposite. Sign of strength with volume confirmation. Second, we then took a look at also the effort versus result on the bar itself, where I showed you a spring example as well on the GPUSD. You can apply that on any instrument if you want. And then the third thing, I then also looked at the test on the rising market, very important as well. Then traders, the second thing that you also then took a look at after the 3 VSA principles over here is that on the second VSA principle, as I say, oh yeah, I should have covered most of it, isn't it? The effort versus result, and then the test. These are the 3 VSA principles. Then we also then took a look at how to apply it, isn't it? How do we apply it? The application. Application using the live example on the GPUSD, right? On the replay mode, I showed you that on the buying side. And I also showed you also on the short side in our real pending order that's over there as well. Okay, so we took a look at GPUSD, went through step by step, and also how I move across different time frames. And then the third thing is we also covered the missing link as well, okay, with the smart money framework structure, which also shows you the probability stats, and all that is encompassed by the smart money indicator. Then the fourth thing, then we then look at the bonus section, how to integrate that into strategy construction. I showed you that roughly as well, either as a single time frame or as multiple time frames using the ripple wave swell concept as well. Okay, so that's that one there. Now, just as I'm shifting the screens, it'd be great if you guys can put in the chat box or the comments, whatever you prefer when you're watching this later. What is one main point that you took away today? What is one main point that you took away today? Even if you're a VSA trader, even if you're not, what is one main point that you took away today that you can integrate into your strategy? So that'd be good if you can then punch that into the chat box. So as you're all doing that, I will go through these reference links over here. So one is the masterclass webinar. Highly recommend this, right, traders? 20 years of research plus 50 years of cumulative team experience is how we have formulated this. Once you come onto this page, read through it, and then you can click on the register button, put in your details, select the time and date what you want. It's 7 p.m. UK time, do the conversions in whatever time zone that you're in as well. And then after that, you got those of you who want to get the framework, you think, you know what, yeah, it's really good, very, very worth me knowing all the probability stats and everything. And remember, you just don't get just the indicator with the framework and the probability stats. You also get the 3 strategy rules, you get the group sessions as well, and also you get the one-to-one live trading session. A lot of people have said, this is so invaluable, I really want to spend time with your trader coaches as well. So sometimes if I'm free, you may be allocated to me or somebody else on the team as well. Okay, good. So that's that one on the SMIOE. You can jump onto this page and you can get it. There's a small discount code there as well. You can apply that as well to get it. On the YouTube channel, youtube.com/master the markets. After you subscribe, click on the all bell icon. And then if you want to then go and revisit some of our live stream content, even this one here, you can take a look over here on that live section here as well, traders. Okay. And then also if you want to go and revisit some of all the VSA videos that we've done along with Gavin Holmes, you can also then see it over here. Trade Guide team on the VSA principles, more live examples, you can see it over there, okay, on the multiple playlists, or you can also go onto the live section and see it there as well. Good. Quick shout out to Trade Nation, who's our sponsor for our live stream as well as for our ETM annual summit. Right. And if you want to open up a broker account with them, you can find that on the Telegram channel. And when you open up an account with them, we got a few more freebies for you to give you as well that you can take advantage of as well. I think with all that said, just a quick one for the upcoming event is the Traders Basecamp package in May that is upcoming next month. All right. And that's where we go very deep into strategy construction and all of that as well. I think with that said, traders, that's actually quite a good wrap up today. I know I went a little bit over time, but I thought it was worth it so as to give you really those 3 VSA principles and the smart money framework, how you can apply the VSA plus the SMI together, the smart money indicator, which gives you the smart money framework and the probability stats together, so that you can then trade with conviction and move from inconsistency to consistent performance. Right, traders, that's all from us for today. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master. Take care and bye for now.